Here we got some trade ideas and analysis from bad traders with your host, Mr. Vaughn over here, and myself, James. We got some good stuff here today. So I was looking at some Seeking Alpha here, and I found some Pharma, specifically AMGN. This is taken from AMGN is a biotech company. It outperformed the S&P and other peers in terms of total returns over the past decade. And the article posits undervaluation relative to other biotech stocks within the space. Identifying a vol play, it has a 40 IV rank, earnings coming up on January 30th. I was looking at an Iron Condor, 59 days out, the minus 260 plus 250 put, minus 300 plus 310 call. And it was a 278 bid and a 320 ask with a 299 mid at the time of writing. So kind of a little bit wider bid ask spread, but you got filled at that $3 area. Very juicy, about a third of the width of the
pretty good. I like that. Wait, that's pretty. That's kind of tight?
No? Not really. Here's the risk profile. I mean, you got a 50% pop or 75% pop.
A little tight.
A little bit tight. There's a little bit of call skew on it, but with the 40 IV rank, and Amgen being a pretty large player in this space, but it posits an undervaluation. So you got a bit of call skew that really kind of like plays into that undervaluation a little bit. I think you have a little bit more room to the upside versus the downside. Because the stock is at like 280. You're selling that 300 call, but you're actually no, it's 20 points either way. So you're right in the middle of everything. 3.3 thetas, a little bit delta neutral.
What's the expected move over the next
negative? The expected move on Amgen, let's take a look right now. For that 59-day expiration, it is plus or minus 18, and you're selling 20 points either way. So a little bit outside of the expected move.
Reason, I don't know why. It just feels a little tight, but
yeah. It feels a little bit tight, but it's
Jan 30th earnings. What is this going?
You gotta let them play out. You know what I mean? You gotta let these play out, and you gotta manage them accordingly.
Brandon's got a good point. January 30th earnings. No.
The January 30th earnings is you're trading the 59 days. By the time earnings come up, then I believe a lot of this will be baked out of it, because you're going to be collecting that theta approaching it. But we could put a pin in it and revisit it, and then reevaluate on or before earnings to see where we're at in terms of volatility and expected move ranges. Typically leading up to earnings, the volatility will expand, but you don't really see that crazy, or at least I didn't really see that crazy of price fluctuation leading up to earnings. So I mean, we'll see, because by the time January 30th gets around, how many days will be left on that cycle? It'll be like less than 21 days.
Yeah, 17 or 18.
So you've kind of grabbed the bulk of that theta decay up until that point. But, if you could see that 50% return on capital on or before 21 days, then, you'd know the trade worked out for you, right?
There you go. I like it.
Yes. All right, next stock here will really interest you. It's a crypto mining stock, CIFR, Cipher Mining's optimization and strategic planning to maintain operational efficiency post-halving includes the purchase of rigs and more mining facilities. The company has acquired a large mining site in Texas with a high power capacity, indicating substantial growth plans. They are strategically purchasing mining rigs at a favorable price and has recently ordered almost 40,000 or 37,500, just about, latest gen Bitmain T21 mining rigs representing 7.1. I think that's an exahash. Dude, I remember when like terahashes, gigahashes, terahashes, and pentahashes were the shit. So I was positing wheeling puts and calls for cheap stocks such as this may make sense. Outright shares presenting an interesting risk to reward. 850 mil market cap shows a face value discount similar. Versus similar. Sorry, I can't speak. The 850 mil market cap that they have right now shows a face value discount versus similar miners in the space, with Riot at 3.4 billion, Marathon at almost 4.8 billion, 4.75 billion. There is a reason for that, though. They do have about a third as much assets as the other ones, which that basically coincides with them being about a third of the market cap. I've had experience valuing companies, and one of the companies that I valued when I was young was AMD, and I did it based off of the book value per share. I don't know what I did, but AMD had a huge freaking rally since then. Like almost like 100x gain. So I did something right to value the company and figure I was undervalued. Over here, I didn't have enough time to do the proper research as I did back then, just because I didn't really look at their actual like 10K or quarterly earnings or annual earnings or whatever. So I was conducting similar analysis to the companies within the industry. I was particularly interested in finding ratios in assets to shares outstanding, as well as a tangible book value ratio to shares outstanding, trying to find a discrepancy in book value to present value, because similar analysis in the past had yielded returns. AMD and Riot, I did a similar analysis on Riot. Riot and Mara have similar assets and shares outstanding ratios compared to one another, 7.4 and 6.6 respectively, and Cipher being at 1.6, which could indicate future asset growth if mining plans as well as crypto price growth brings up the company. Again, they have about a third as much assets. That means they're about a third or fourth the value of it, at least from my analysis and compared to these ratios. There's a lot of room for growth. They are increasing their assets while at the same time increasing their working capital and decreasing their did I say they were decreasing their debt? Yeah, so their balance sheet and cash flow statements look pretty good. Again, it's a $3.50 stock. And it looks pretty juicy. Vaughn, what do you got to say about it? I know you don't agree with a lot of
I just want to say this. I think the only reason that people are trading these shitters is because there are no centralized products for crypto. Once there's an ETF passed, once there's a spot ETF on the table, I don't think anybody's going to be trading this stuff. Why the hell would you invest in a business model that mines Bitcoin when you that has an underlying assumption that Bitcoin is going to go up in value when you can just buy the product?
Right. There's
just so much more at risk on the table buying one of these mining companies than there is just because you assume that these mining companies are going to go up in value because either A, the price of electricity is going to somehow go down, or B, the price of Bitcoin that they mine is going to go up. I don't know. It'll be interesting to see.
Well, I had another stock here to
let's take a look, my boy.
The microcap pharma stock STTK. Shattuck Labs develops bifunctional fusion proteins for cancer and autoimmune diseases with over 400 drug candidates. Their primary clinical stage product, SL172154, showed positive results in phase 1 trials for specific cancers such as ovarian cancer as well as other malignancies. Drug SL1722 demonstrated high response rates, acceptable safety profiles, and potential for bone marrow restoration in patients. It recently had a rally from $2 to $6 on this news. Its market cap sits at $260 million. Up here, can you see my screen here? There we go. Yeah, so STTK, I think on this news recently had this massive 300% rally from $2 a share to $7 a share. And there is more potential on the horizon considering where they've been at in the past.
Whoa. Anchoring bias.
Blah, 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 blah. There's just a lot of stuff in the pipeline that looks good for the company. Very positive outlook on their specific drug. I mean, this is biotech. This is pharmaceuticals. There's stuff that makes it implode or explode in a matter of seconds. But, yeah, I mean, at least this massive increase in volume shows that there was positive response to the phase 1 trial of the drug, and I think there was a coincidence of volatility increasing in STTK. There's actually there's not. IV ranker 2. Not really too much options activity. Doesn't even look like you could sell it. Maybe you could sell 87-day puts at $5 a share and get 20% in premium. It's actually not a bad idea selling $5 puts.
I think we both have gotten hosed on selling vol on pharma products, man.
I think if we're taking into account Novavax, I think we did very well.
Yeah, I got hosed there a couple times for earnings.
Yeah, but that was before you got like success on it. I mean, did you give back everything that you got from it?
I just like I know through the data that I have collected, pharmas are something that I need to stay the absolute hell away from. So
I remember one of my favorite pharma plays with you was APLS. Remember, I
APLS,
woke up 3-day trade. Woke up one morning, I checked my brokerage up $1,000, closed out the position, done. Went back to sleep.